Welcome back, traders and investors. We have a very special guest on today, AnneMarie Baiynd. Now, AnneMarie is a day trader, educator, and author of the trading book course, A Practical Guide to Profiting with Technical Analysis. And she has a very cheerful voice, so she's going to give us some good ideas today. AnneMarie, how you doing today?
I'm well, thank you. Thank you for the cheerful voice commentary. It's always good to know.
Yeah, well, just real quickly, I mean, you got a real diverse background here from your education and everything, and just give us a quick recap of that and how you ended up in the financial markets.
I really had never knew anything about the stock market because as I was growing up, I was sort of on the fringe of that sort of thing, and then took up mathematics. And after I became a neuroscience researcher, I just really felt it would be nice to actually make a real living instead of eating ramen noodles. And so I moved out of that space, and I spent a long time in the recruiting industry, recruiting people with backgrounds like mine. And, after a while, I got tired of doing that, and I wanted a change. And I was fortunate enough to be in a space where I could choose. And I saw something about the stock market. I saw technical analysis. I said, hey, how hard could this be? And that's pretty much all she wrote. Been about 8.5 years since I was involved with the market, and really I love it more every day. It is the most intriguing and maddening space you can put yourself in, and I do love it.
Well, you should know, I mean, about maddening things. If your Wikipedia page is correct, you have 9 children.
Yes, we have a blended family, and so there are 9 between the two of us. Yes, that's a lot of kids.
Wow. 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 I
Yeah.
don't know how you find time to do things. But anyways, let's go into your first book here, The Market Positioning System. Could you give us a little bit of the details on that and how you came about it?
Essentially, I was not a natural in the business, and I've tried to be very, very honest about my move through the markets. I was very bad at trading because what I thought wasn't what was actually happening. And so, in order to really right the ship, I stopped trading and pulled myself back in. And I said, hey, listen, how can I make this straightforward enough for me to make proper choices without wrapping myself around some kind of mental axle, because I brought a sky cab of baggage in terms of how I made decisions to the market. And really, being in the market is about decision making. It's not really folks that are sitting around saying, you know what, I have so much technical knowledge and I still can't get the right rhythm. It's not because technical analysis doesn't work. It's because our execution events around technical analysis is what gives us the trouble. And so I got a call out of the blue from McGraw-Hill, and they said, hey, listen, we want you to write a book, and we want you to talk about the system that you brought together. And it had to be very straightforward for me because I needed to have something that gave me a 1, 2, 3, 4 step event and then send me to make a decision. Otherwise, I would always feel like I was guessing, and I was a really, really bad guesser. And so the MPS, the market positioning system, is really based on a couple of just a few indicators that combine at the same time and agree with each other, and then we step forward. And that's pretty much the basis of the entire tradingbook.com as well as the books. It's just here's how it looks, here's the best places to use it when it works, right? Because a lot of us try to use one indicator and put it in every space, and it's just like you don't want to take an umbrella out when the sun is shining, and you don't want to leave it at home when it's raining. There's a place for it. And so many of us need to learn how to decipher what tools we have and where we should use them, right? I'm not going to use a hammer to bake a cake. And so that essentially is
If you're
one of the
making a
key
pound
elements of.
cake, what if you're making a pound cake?
Yes, indeed.
So I think the first thing I want to go back to, and I think it's really interesting, is that you started trading, okay,
Yes,
and you started with X amount of dollars. I mean,
yes.
did you just go, straight down? Did you have any like winners that
No,
made you
you know
kind of
what? No.
happy, or was it just like, wow, I'm terrible at this? Because a lot of people don't have the discipline to admit that. Did you just, I mean, was it just terrible, your
Oh, it was
start?
a train wreck. It was an absolute train wreck. I would get one win and then 20 losses. I mean, I say this all the time. The reason that I am still trading today is because of the amount of money that I started with, or else I would have completely run out of money. There's absolutely no doubt about that. Now, in hindsight, I really wish I had stepped back, stopped, and really tried to right the ship many, many hundreds of $1,000s earlier, but I didn't. And so those lessons of the past are seared in my memory. And there's one thing that I will not do. I will not give up. And that's sometimes bad, but in this case, it was very, very good because I kept saying, listen, I know it's there. I'm just doing something wrong, and I need to figure out what that is. And so, yes, it went seriously. I did not have one winning month in about 17 months.
Holy
I had a
man.
couple of winning weeks. I would have three really nice weeks, and then one week where it would strip everything away. So I was either marginally down or horribly down. And that's why I said, well, actually, my husband said, hey, you probably ought to stop that until you figure out what you're doing.
Right. Okay. Getting back to your system, and I see it's a combination of things here:
Hmm.
support and resistance level, price channels, moving average, Fibonacci retracements, Bollinger Bands. We talk a lot about analysis paralysis, and
Yes.
you know, the way to put trades together. Dennis and I are big support and resistance guys, and we
Oh,
really
it's
focus
key.
on double tops and double bottoms. You mentioned a couple things here. I think if I was looking at that many different things, the price channels, moving average, Fibonacci, Bollinger Bands, I might get a little bit confused there. So could you kind of walk us through your thought analysis here? And is there one thing that you put more emphasis on than the other?
That is a really great question. And in the end, all it boils down to is support and resistance, right? So if I'm looking at a Fibonacci and I draw it up and I see a specific line that appears to be important, my brain will go to, all right, what else corroborates that particular line of support and resistance? If nothing else is corroborating it, I throw that to the side. My basis for everything is where are people buying and selling? And the market, every time you look at a chart, it's telling you a story. You've got the ES up here right now. And what it's telling us is that they're arguing right in this pocket. We've got a very wide range of noise that we are working through where there's a lot of arguing. So your trading events are going to be in the spaces where the least amount of arguing occurs. And the least amount of arguing occurs in places of inflection, right? Not places of stagnation. To the left of your chart, you'll see all kinds of stagnation. But as you move past January and go down into February, you're going to see that that stagnation moves away and it becomes an inflection. And once it loses that level, we know that the fight between the buyers and sellers has been won by the sellers for now. And so that's really all we do. We look for the places that the battles are ensuing, first from what are the candlesticks telling us to where is it that sellers are really holding things up holding things down, and where are buyers holding things up? Now, once we lose a place where buyers have been holding it up, it means the sellers have beat them for the moment. And so that momentum is going to drift with the sellers. So all we do, we look at the chart from movement and motion, and then we say, all right, is there anything in the way of that move coming down into what I see as the next area of support? Sometimes it'll be a moving average. Sometimes it'll be, now we haven't, that book, my first book, written, wow, almost 4 years ago now, that first book uses the Bollinger Bands quite a bit. Because volatility has changed the way it does, we don't use the Bollinger Bands as much anymore, and I am about to sneeze, so you're going to have to forgive
That's
me.
okay. I don't have a mute button for you, but while you're sneezing, could violin makers ask for like a chart? And I don't know if you have our charts up right now, but I have a.
I do. I'm watching your ES chart.
Okay, so just in the context of what you were just talking about, can you know talk about this S&P chart here?
Okay, so that's exactly what I was referring to. Notice how you've got January to the left, and you've got that region of congestion. It's to the very left of the chart,
Correct?
right?
Yep.
And and so the top end right there, where we see all the wicks and all that motion, that's a region of congestion.
Okay.
And so we're never to trade in regions of congestion. It's not worth our time, right? If you move your cursor up just a bit to where the first red candle begins in that particular space after the January 20 region, you're going to see that it begins to break down. Not to the right, to the next. Yeah, keep going. Keep going.
Okay.
You
There's
want
a
to move
little
your cursor
delay.
to the
Little
right.
delay. Yep.
Yeah, stop right there. Right there is a space where the congestion event is beginning to break down. Sellers have established a threshold that says, hey, listen, you're not going to move above that level. So the buyers consistently are trying to force their way up. But when the sellers start making real gains, like the first candlestick that rolls down from there, we look to the left and we find the region that the buyers had the most success holding up the chart, and it looks like about 1820 or some change like that, maybe a little shy of that, right around, you'll have to go up a bit. It's congestion to the left. No. Yeah, no.
My other
Stay,
left.
stay right there. No, don't move. There may be a lag
Yeah,
for us
there
right
is a
here.
little bit.
But for February the 3rd, you just want to sit right there,
Okay.
right in the middle of the chart. We can see that all that congestion gets broken down. So the level of support, somewhere around 1860, and the level of resistance, somewhere around 1850. Those two pieces give us the region where we do not play because big money is arguing about who's in charge, and we don't need to get involved with that fight. So with the support and resistance events, we wait for the level of that support to lose, and then we get involved until the next region of support, which we can see is from December. Remember, charts revisit the places that they have been, and certainly if they've been there with volume, they will definitely revisit, and it certainly revisits that December 16th area that we can see right there as support. But because it never gets back up into that 1816 area, we can stay short as it moves down into the next area of support. So we begin with support and resistance just like you, but we use those moving averages to tell us, listen, is this going to be a little bit of a bounce area? Can I take some profit and wait to add? Can I move some of my position off? Can I trade around it in this space? So we're looking at technical indicators as supporters of the ideas that we are seeing from price action, not indicators to move or stay away, which is very, very different than many people use indicators. They go, oh, okay, that's the so-and-so cross, and that means I need to move. No, that means you need to pay attention to see
Okay.
if the rest of the chart is telling you where you need to go.
Okay, how about some fresh analysis here on CME here? It's a stock that DJ likes to trade here, and I kind of getting a feel for your areas of to stay out of here, or to when to get into the stock here. I'm pulling up a chart of the good old CME Group, the Chicago Mercantile Exchange here. Are you looking at this 72 to 78 range as kind of an area kind of to stay out of, or are you respecting the support at 72?
Well, I think there's pretty solid support building there for a couple of reasons. One is there's a lot of price acceptance around the 74, 74.20 area. There's quite a bit of price support action in that region. And so as we have expanded away from it very, very quickly with this morning's pre-market action, we seem to be building um, a measure of support somewhere around that 72.50.
Mm-hmm.
So it should bounce off of that region into at least 73.50.
Okay.
If it holds 73.50, it's going to try and accelerate into the opening print of the pre-market, which looks like it's somewhere around 74.60.
Okay.
But that area is going to be a little bit of a suction event in my mind because um, it's built a bit of volume in that region. And when we expand away from a place that's had a lot of volume acceptance, we will come back to test it. It doesn't mean that we're going to reverse and go back in the direction from the area that we came, but it does mean that we're likely to retest it, which is one of those things where I say, hey, listen, if you fall through a level where you've seen a lot of candlestick action, it's very likely it comes back to that candlestick action to decide where it is that it's going. My philosophy is that the market is generally neurotic, and it turns behind to see where it was, to test the regions where it was before it decides where it's going. It's always looking a little bit in the rear view mirror. And so for this particular chart, which I really never really look at, but I can certainly see the price pattern, it's drifting extremely rapidly away from areas that it should not. So it should hold this area. Now,
Okay.
that being said, if it loses the low, the next region of support looks like it's going to be somewhere around 71.50.
Right. Okay. Just getting away from this technical stuff a little bit to end the
Yeah,
interview. A lot of trading psychology, and I know you talk about it in your book, and that's really what challenges so many traders.
absolutely.
How do you approach it? I know you got more in your book, but just could you just touch on trading psychology a little bit?
Absolutely, Joel. Uh, there are a few of us that think that trading psychology is just a bunch of bunk and you should just be completely logical. But the fact is, none of us, though we would love to say, I am so logical, we aren't. And the only way we make decisions is if we become attached to the outcome. And so when we look at something and we go, oh, that's going to make me a lot of money, we become attached to that outcome and then we make a decision. Trading psychology is by far the most important thing that we need to examine on a personal level after we've got the basic understandings of technical analysis, support and resistance, and what candlesticks might actually be telling you, key elements. But after that, again, it all boils down to how do I make decisions? If I am an impulse buyer, if I'm the type of person that decides, you know what, I think I'm buying a car today, that bleeds over into how we make decisions in the market. We have a tendency to go, oh, Jeff says buy blah, blah, blah. and then you just go out and grab it and you start looking at it after the fact. The key element to becoming a good trader, really, the bottom line, is consistency. And the way you build consistency is by making consistently good decisions. And the way you make consistently good decisions is to understand what makes you make bad decisions and stay away from them. And so for me as a person, I was afraid of missing out, and I was afraid of getting in when things were looking too good. And so I became an underdog trader. I would say, oh, okay, that's really pulling back. That's got to lift now. Or that's really bouncing high. That's got to roll over. And I learned that what I was a contrarian by nature. And so you've got to understand, if I am a contrarian by nature, I must use very specific rules to engage in a trade if I'm looking for the contrarian event. For me, I just said, I don't need to be a contrarian. I don't have a bazillion dollars. I don't have the money to move the market. So I'm just going to become a follower, and I'm going to be the best follower that I can be.
Okay.
So again, learning how you make decisions and then adapting your trading strategy to that is what's going to change uh, what your results are showing. And, if you're looking at yourself going, I know what's going on, and your account balance is still going down, it means that you might know what's going on, but you are not making the right choices. And
Okay.
a lot of us have a hard time making that decision and saying that about ourselves.
Wow, thank you for a look at things from the technical side and also from the psychological side. It's a way you have to approach the market. We've had AnneMaries Baiynd on, day trading educator and author of the book The Trading Course, a practical guide to profiting with technical analysis. Thank you for your outlook on the market, about psychology as well as the technicals, and certainly like to have you back on again.
A pleasure to be here. Thanks so much. Have a great day.
Okay, all right, thank you.
Thanks. Bye-bye.